everyone, K Kim here with the Traders Club. Welcome to the market update. Today's January 27th, 2017, Friday. Happy Friday, everybody. And as I record this video, it's a lunchtime. Market will be open under 3 hours. And I hope you guys had a good week trading the market. Today we're going to talk about S&P 500. We're going to be looking at Spider and kind of forecast what might be happening next week. You know, as always, we'll look at gold, silver, and miners. And then I'll look at some of my current holding positions right here. And then we'll end the video with that. I'll tell you, before I get into current sentiment of the market and the forecast for next week, I want to tell you exactly why this market continues to move higher and exactly why this market will continue to move higher, right? So have you heard that people are saying that this move right here since about 2012 all the way to 2014, 15, this move has been considered the most hated bullish rally in history. The most hated rally. And if you've been only trading last couple years, if you've been just coming into this world trading and investing last couple years, you probably heard significant amount of so-called experts and gurus or even prominent figures on CNBC and CNN Bloomberg coming on TV and saying that this whole thing is going to crash. And when they say crash, they don't mean 20% correction or 30% correction. They mean crash. They mean 50 to 60% crash, like we saw in 2008. And the crash we saw back in 2000. When they say crash, they mean bear market. I want you to understand the terminology. Do you know that? Because you just think that, man, these guys just calling things out, and man, this thing looks not stable at all, man. 2015, look at all this volatility we've seen. Well, the same people been calling the same thing since 2012, 2011. Did you know that? Mark Faber, I actually did a video on YouTube exposing this lunatic. Been calling market crash since 2011, and every year after that. Every year, 2011, 2012, 2013, 2014, 2015, 2016, and CNBC continues to invite him in to give us his knowledge of the market. It's preposterous. Preposterous. It's absolutely appalling, right? But anyway, and then we got like a guy named like Harry Dent, right? He's been writing books why the market is going to crash. The market crash of 2012, market crash of 2014. And we got other lunatics that I don't remember their names writing books like why, the market crash of 2016, right? So if you think that last couple years there's a lot of shakiness, everybody's calling for a crash, dollar is going to collapse, the whole thing is going to go to nothing, we're on a Titanic. If you've been hearing a lot of that, well, guess what? I've been hearing that all throughout 2012. There were people coming on TV here, 2011, 2012 here, saying that the spider's going to 60. I'm not kidding. I wish I saved those videos. I can't find it. I don't really want to show. People, coming on TV and said that the spider's going to 60. Not kidding you. So get that shenanigan aside. Don't listen to these lunatics and crazy mofos, because who knows what they're doing. I bet they say something on TV, they declare one thing on TV, and they do completely opposite, because they realize that, or either that they're just some kind of puppet, like somebody else telling them to do say that, so these really, really powerful, wealthy, central bankers who's trading the market know that if they can brainwash the masses and the public to believe that the whole thing is going to crash, then inevitably the market is going to continue higher, because the market always follows the majority, right? So those people on TV, they don't care about you. And it makes me angry because common investors and traders like you and I, they rob us. If you're not smart enough, you got scared, so you pull out all your money in stocks back in 2011, start shorting. You lost all your money when you could have benefited from this monstrous move we had 2011 all the way to 2016 and 15 because you listened to Mark Faber, because you listened to Harry Dent, because they are very prominent, smart individuals. Right? No. They're losers. They're robbers. They're thieves. Lunatics. They should be jailed. That's what they need to be. Because they're robbing these average investors. And it pisses me off because who knows how many lives they destroyed. Who knows how many people listened to their advice and tanked their account or not was able to profit from this huge move. So what I'm getting at with this is psychologically, and let's put that aside because they're lunatics on it. They're stupid anyway. I don't listen to news. I don't need them. I don't need anything. I need technical analysis to tell me where the market is going, right? And some of you knew, if you're just listening to my video and you haven't listened to my past videos in 2016, early 2016-15, you might be thinking, well, okay, you're just saying that now because the market looks so bullish now, so you're just acting like you know. No. Go back and see what I was saying in late 2015. Go back and see what I was saying back in early 2016, mid 2016. And, you know, there's tons of videos on YouTube, on my blog, that you can review what I've been saying. And I'm not trying to say that I told you so, I called it, I'm the master of the market, I'm God, and you should worship me. No, I'm just a man. It's just probability game, and we must learn to understand to respect the trend. Let me give you just basic technical analysis 101. Just basic, just trying your trend line. Let's connect the dots. Huh. Interesting. What does that mean, Kay? That is very difficult for me to understand what that means is. Well, that's what we call higher lows. As long as we continue to cultivate higher lows and higher highs, we're in an option. I know I'm making fun of some people, so that's the basic right there. And that's exactly what I've been saying. Go to my blog and read the update or the article. You know what? Let me show you. Here's the reason why I'm showing you this. Here's the reason why I'm showing you, because they are people. I know who they are. I'm not going to say their names. They are people that been calling the crash all year long. They're producing videos. They're writing tweets. They're writing articles saying that the whole market is shaky. The whole market, we could see a crash like 2008. Again, I'm not going to say who they are. And then they finally now saying that the market is getting ready for another huge bullish run. Now they're saying that. So for those of you who think that I'm the same way, now I'm coming out saying they're making fun of the buyers, sellers, and making fun of all these experts who did call it wrong. Now you're calling and saying no. January 2016. You can go ahead and read that, but here. That's it. Well, does this mean that it's 100% guaranteed that the market is going to all-time high and let's ignore everything else because of this? No. That's not what I'm saying at all. Just go ahead and read this article, then you'll know what I'm saying. What I'm saying is benefit of the doubt, looking at things in a primary term, goes to the buyers as long as we stay above in this rising uptrend support. Dow theory, a trend is assumed to be in effect or valid until it gives us a clear signal that it has been reversed. Clear signal. This is not a clear signal. And also I have plenty of videos to let you know what clear signal means. So I just gave you two basic technical analysis. And if you understood two basic technical analysis and didn't listen to some lunatics, you did very, very well and been doing very, very well. So psychologically though, everybody was looking for about 30% correction. Everybody started shorting here. Their goal was to come down. I'll short it. I'll short it to about 150, possibly even 140 and 30-ish. And then I'll cover here. And I'm going to start going long. Because that makes sense to them. It makes sense to most people. It makes sense that that's the level they are willing to go. Because the high valuation in stocks. This is too expensive. It's crazy to go long here. It's way, way too expensive. 150, 130, 30-ish on Spider. That makes sense to them. It makes sense. Right? And because most people are thinking that, that didn't happen. We never got 25-30% correction. We got about 15% correction. And then it continues to move higher. And then I'll tell you another. That's a primary term perspective. I'll give you minor term perspective. After all that move, and we started consolidating like this, people are, and then most people are thinking, it can't possibly go any higher. It's crazy. It's crazy. So do you think people who thought this was very, very expensive up here, back in, right here, like 2013, 14, 15, this was way too expensive. Those people are not going to go along here. I mean, this has even got more expensive now. It cannot go. It cannot go any higher. This is crazy. This pig is just gonna get slaughtered. This pig, this thing. So you know what happens? We start to consolidate, and then this is what most people will say. Okay. A lot of people will say, all right, I should have bought the dip, but then there's so much uncertainty with the elections. Well, I got scared, so most people didn't able to participate that. And as they start to move higher so fast like this, it's just most shorts were dumbfounded at this point and were not able to participate. They may have been trying to call the top and got burned a couple times. And then so now they're thinking this, okay, if we see another correction like we saw, like 5% correction we saw before the correction, I'm gonna go along this time. I can't wait any longer. I've been missing out so much. I've been losing so much money on shorting the market. I cannot wait around any longer. So I'm gonna wait. So what I'm gonna do is I'm gonna start shorting here. I'm gonna wait for about 5% decline, and then I'm gonna cover my shorts, and then I'm gonna go long after 5% decline. That's what most people are thinking. What happens? We never get that 5% decline. We never get that 5% correction. Why? Because most people are looking for that. They know we're an uptrend now. Though we were still, they know. Now they know we're in an uptrend. But we've always been in an uptrend. We're never in a bear market. See, people gotta understand, this is a bear market. We're never in a bear market looking at a primary term. Do you understand what I'm saying here? So, that's what they're looking for. Market will never give them what majority of people think. And then we finally, looks like this thing is a breakdown here, right? After that, but it didn't. Fake slot of bears out right about here, goes right back up, and we break out. Because the people, even people with, a little bit of fortitude, who shorted down here, they're not going to close it out, so they start adding. They start adding to this. This pig is going to get slaughtered. I'm going to wait. We're going to have a 5% decline, like we've seen here. They're going to start saying that, well, the price section here is very similar to the price section here. So we're going to come down 5%. And then I'm going to start buying it there. I'm not going to miss this move again. I'm not going to miss move to here. So I'm going to buy that dip hard. And then it doesn't. It doesn't. And then it keeps on going higher. That is precisely reasons why market has been going higher, continues to move higher. There's precisely reasons of why, psychological reasons of why we didn't see 30%, 40% correction. We didn't see crash in 2015, 2016. There's a precise reasons why we didn't see 5% pullback. We merely saw what, 2%, I think, and then we continue to move higher, and I believe we'll continue. So looking at more of a minor term perspective here, forecast analysis, obviously, as long as we hold this level, I think first level support 228.90, 86-ish. Looks like a bull flag here. If we bounce, we'll continue to move higher. Worst case scenario, you come and fill the gap, kind of fizzle a little bit, and then go back higher. I think people ask me, well, we really didn't see that like minor term correction, okay? We didn't see. So then when do you think the correction will happen? Well, correction already happened. We didn't, because you think, well, just because we have, just like the big picture analysis I've done, in this video earlier, just because we didn't see 30% correction doesn't mean that's not a legit correction. Just because we didn't see 5% correction, that doesn't mean it's not a legit correction. We corrected in time. This was about a 1 month consolidation. We corrected. Now it's getting ready for another move higher. So next week, level to watch is 228.69 support. If you start to come fill the gap at 227.91, we're gonna find buyers in that vicinity if it does continue higher. We find support at 228.73. And this bull flag turns out to be true, then I believe we'll continue high to the upside. And I don't believe we're gonna see probably a huge move like that. But this is where we're gonna start to see like these grindy move, like these here. Like we might see a move like something like that, like this grindy move, and then you get like sharp pullback and then grindy, sharp pullback, like something like we might see a move like this. If I give you an example, right? So this is the reasons why the market continues to move higher, and always it fools the majority and rewards the remnant of traders, investors who understands the market and its trend and respecting the trend, right? So I just spent 16 minutes explaining the psychological perspective and behavior of this market. Market looks bullish. I am very bullish throughout the year, maybe even the next 2, 3, 4, 5 years. But if I give you a little bit of Fibonacci expansion here to kind of give you some kind of idea. Actually, let me try. Yeah, I think. No. You know what I want to do? No, that's not what I want to do. I want to do more of an intermediate term Fibonacci. Yeah, that's what I want to do. That's what I want to do. See that 50%? This is a precise reason why I went long there. I wonder what happened to my 200 SMA. Let's see. Let's make that close. Okay, so yeah, there's a 50 retracement coinciding with that 200 SMA. I bought that dip. Obviously, I don't have it. I started closing positions here, so I'm completely out of spider. But I am holding many long positions on the equities. And it came precisely to about 138.2. You see this? 138.2%. That's the precise reason why I started closing out my position there. And I think next support is about, or resistance or target will be about 232-ish, 233. So that will be the level to watch there. I'll go through this quickly here. GDX, obviously, GDX made pretty good progress. And obviously, this was the important pivot. We are clearing this resistance here. If GDX can able to get back up here and then a pullback and then possibly through this inverted head and shoulders, then I think that we can able to get to about 2069. But if this gap acts as resistance, because currently you can see they've got a shooting star type of candle here, and if it continues to fall, then I think then it will get to about, it will fill this gap here. So with a pivotal level is 2250 to watch. And that vicinity, I wouldn't be like, oh, okay, it went 2249, so I'm gonna go bearish. It's just in that vicinity. We got 50 MA coming. It's the vicinity that you're gonna watch there. Let's go to gold. Obviously, gold. Gold is actually not looking too good. Why? Well, this right there, that is important pivotal level. We attempted to break above it. You see right there, this was a prior support. It's now acting as a resistance here, so not looking too good. Let me see. It doesn't fully. So we got like this downtrend going on. So things are hectic for gold with the lower highs and lower lows here. So these are the levels to watch going forward. I mean, man, we got this resistance here. So what if the gold really want to thrive? This would have to come all the way up. This is a primary resistance here, and then horizontal resistance, pull back, and then if we can do that, then you may be able to play something there. That's when I'd be possibly thinking about preparing to possibly go long, but I wouldn't go long here any of these places. Silver, yeah, silver is also retest. This is important vicinity. See, this is the reason why technical analysis is very, very helpful. I mean, it just respects these levels, picture perfect. This was old support becoming new resistance. Old support became new resistance. Now we're just really struggling there. Again, if this thing wants to thrive, that's what you want to see. But right now, it's this is a level to watch, 1632-ish. If you're gonna have to get above that, you know, possibly can get. We have this. This is a long-term downtrend resistance, so maybe anywhere above it, this is where you can start thinking about possibly preparing to go long-term. But at this point, as long as the price stays below this falling resistance, benefit of the Dow goes to bears in the primary term. You guys understand what I mean by that, right? Primary term. Let's go to some of my holdings here. Apple, Boston Scientific, Intel, and eBay, and I'll end the video with this. Apple, obviously, I'm still holding my remaining positions. These were my entries. Closed half here, closed another half of remaining. So I'm still holding, and earnings coming up here. I'm going to hold through that and see what happens. But obviously, as of today, the 20 MA continue active support. It's bullish. Apple looks bullish. I am very bullish on Apple throughout the remainder of this year, possibly even next year. But so again, like I've been saying, any sharp decline or any correction or move, it is an opportunity. But I actually kind of want Apple to miss and get a like steep down, you know, gap down, and then I want to buy the dip for higher because big picture looks bullish. But I bet a lot of people, this is what I'm talking about psychologically. They're like, oh man, I should have bought it here. I should have bought it here. Man, I should have bought it here. But I was fearful I didn't buy here. And then it started moving higher. You know what they're thinking? Who people think that they didn't buy here? Next time we get a pullback like that, I'm buying. I'm buying. And because of most people think like that, Apple might not see that kind of pullback anymore. You see, it's interesting. This market is phenomenal plays. It just knows what we're thinking. It's crazy, and it makes a lot of people really, literally, like, you know, have them go crazy and want to pull their hair out. But at the same time, it's fascinating. Do you understand? It's fascinating how this market just knows. So Apple looks good there, no worries. Boston Scientific, earnings coming up February 2nd. I did close half here. This was my entry, so I'm holding half. I'm going to hold through my half through the earnings February 2nd. It looks bullish. I mean, I'm very bullish on Boston Scientific. I've been trading Boston Scientific since some of these levels. Okay, so I got those. Yeah, I mean, I blogged about it. I tweeted about it. Been trading Boston Scientific there, and I think Boston Scientific has so much more room to go, even all-time high there. So I'll continue. So, like I said, like any steep pullback, I've been buying that dip. You know, that's where I first got into it. There's analysis of why. I wrote an article on it, and then I started closing it at the top here. I got back long there. I started closing at the top. And then recently, again, I tweet about it that I wrote an article about it that I will go long around 20-ish. When I did that, this one is right here. Then I close it out. Not close it out. I close half, and I'm gonna hold through the remainder there. It's uptrend. It's an uptrend, so definitely bullish there. Looks like a bull flag. Possibly another leg higher, but we do have earnings coming up, so it might not play out smoothly. Let's go to Intel. Earnings yesterday, I held through it. I tweeted out that I'm going to hold through it. This was my entry, and then I closed out 30% just a day before earnings, or a few days before earnings, 30%, but I had 70% remaining. I held through the earnings, and it's holding up well. We have a little bit of gap here. It is resistance, though. You can see that the prior resistance, overhead supply here. So we got through a little bit of doji or high wave spinning top. So we'll see what happens here. I'm going to continue to hold. Lastly, eBay. I'm holding full position on this. Tweet about it, blogged about it. I'm going to hold through the earnings, full position. This was my first entry. I said I was going to go long on 27.42-ish. Again, I tweet about it, blog about it. And then we did a lot of zigzagging, but zigzagging is fine. You know why? Because we are cultivating higher lows and higher highs. That's all you need. And then earnings held through it, and then good earnings gap. I was looking for 31-ish to add some more there. It just doesn't look like we're gonna come back down. If that's the case, I continue to hold. Talk about the target next time, but that's all I have for today. Have a great weekend. I'll talk to you next Friday on the market update. Have a great weekend. Have a great night. I'll talk to you next time.